Oh, hello and welcome to Business Incorporated live on Channels Television. It's a wet trading day. Hope you're not slipping in the markets, but here's what's coming up in the next 55 minutes. We analyze the journey so far. ECOWAS turns 50. And we get the drivers as the price of a 50 kg bag of cement is risen by 25% from 8.4 to 10.5 naira so far. And inflation in Zambia slows to an 11-month low as food prices ease. And it's good to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with the global commodities market. Starting with oil again, we did have that rise earlier in the morning, and we're still seeing that continue as we've seen some kind of direction on the tariff battle right there in the U.S. And we've seen Brent staying comfortably a little more comfortable above that $65 level per barrel, 1.63%, a big jump. WTI, that's the U.S. grades, left that $61 mark there at $62.93 a barrel. I'm heading for that $63 level, up 1.76%, and still on the back of the court there telling the president that at this point, that's President Trump, that you cannot unilaterally just give out all of those tariffs in most of these countries. So we're seeing that discussion continue at this point. We've seen the White House saying that they're going to appeal that ruling. So we'll see how that plays out. But for now, the markets are having fun on the back of that news. Let's get a check on the metals market now. How is metal reacting to that at this point? So it's a mixed picture. We're seeing spot gold as a safe haven trade there, losing that $300 mark of the $3,000 level, $3,281. US spot gold, that's down 0.5%. $3,279. But on the flip side, we see other metals shining, like spot silver, $33.48 per ounce is a bull market coming for spot silver at some point. We'll definitely find out. Platinum, 0.82% up, and palladium down below that $1,000 psychological level, but up 0.98%. Right there for the trade. And it's all about dollar strength at this point. Two other matters now as analysts and economists review the economic scorecard of President Bola Tinubu. Businesses in Nigeria have had to navigate a tough environment. Well, according to Mr. Olagoke Balogun, CEO of So Fresh Neighborhood Market, the business environment in Nigeria has improved, but more still needs to be done. I had a chat with him earlier on Business Morning. Take a listen.
No matter what the climate is, there is always, business opportunities. So for me, I think for a business, the questions you need to be asking yourself is, at every point in time, are you on the relevant channels? So if you're on one channel, you're on two channels, can we increase that channel to increase visibility, to increase awareness? Because there's no business that you get to a point where you've reached all your customers. So there's always opportunity, one, to reach more customers. There's also opportunity to sell more to your existing customers. Like, you're either selling more or, giving them a different service or different products to the same customers. So you need to just be asking yourself, what are those levers I need to pull? Am I opening up more channels? Am I, going to new regions?
And as the Lagos State government says, it has commenced the integration of the national identification number into the Lagos State Single Social Register as a subset of the National Social Register to facilitate the federal government's cash transfer to the vulnerable in the state. The State Commissioner for Budget and Economic Planning, Mr. Okwe George, disclosed this during a press conference in Alausa Ikeja on the national identity number integration with the National Social Register. Mr. George says the move was necessitated by the urgent need to tackle current hardship triggered by the collapse of the Forex window, removal of fuel subsidy, and the proposed payment of relief grant. Take a listen.
The federal government has directed that through a presidential panel that households on the national register must be updated, especially with the national identification number and geolocations, which is the name. This process commenced on Wednesday, the 9th of April 2025 in Lagos across all our 57 local governments and our local council development areas. And it's being carried out in alignment with the directive of His Excellency, President Bola Ahmed Tinubu, to make sure we strengthen the National Social Register and ensure that all states operate a synchronized and reliable database of vulnerable population. Through this integration, we're not only building a more robust and inclusive register, but we are also ensuring that the resources are delivered to the right people at the right time for the right impact. As many of you are aware, the Ministry of Economic Planning and Budget is custodian of the Lagos State Single Social Register, which is a living database of the poor and vulnerable households across the state. As we stand, the register currently stands at about 688,759 heads of households, and we have 2,681,507 individual members. It has been the backbone of our intervention strategies and a trusted tool for targeting those mostly in need. However, we understand for it to be truly a genuine register, we need to ensure that we deliver on its promises, and it must be credible and transparent and easily verifiable. This is why the integration of NIN is absolutely critical.
All right, the creation of Africa Credit Rating Agency is part of conversations at the ongoing African Development Bank Group annual meetings in Abidjan. The coordinator of United Nations Development Programs, Jide Okeke, was discussing on the panel tagged the strategic role of the African capital markets and the Africa Credit Rating Agency. They're asking Africans to be intentional in working out the plan for the agency.
It is less about trying to challenge the credit rating agencies through arbitrary criticisms, but more about trying to build the capacity and capabilities of countries and government to be able to negotiate and have a frank conversation with credit rating agencies. I think this is the approach that we think is excellent. We think that it is going to, over time, it's not going to be immediate, it's going to be incremental. Over time, it is going to alter the methodology. And as we think about the establishment of the African Credit Rating Agency, I think UNDP would like to work very closely with the African Union to ensure that we are not just, it's not about radically transforming the methodology, but it's also about building the capacities of our countries.
And now to our first conversation. As the Economic Community of West African States, as ECOWAS, commemorates its 50th anniversary, stands at a pivotal juncture in its pursuit of regional trade and economic integration. Established in 1975, ECOWAS has aimed to foster economic cooperation and integration among its member states. Over the past 5 decades, the bloc has made strides in promoting intra-regional trade, harmonizing tariffs, and developing infrastructure projects like the West African Power Pool and the proposed ECOWAS Railway Network. Well, let's discuss more now with Fidel Owusu, who's the CEO of DefSec Analytics Africa Limited. It's great to have you on the show.
Thank you very much. Thank you for having me.
Yeah, it's great to have you. So, let's, assess some progress now with the trading bloc. How effective would you say the ECOWAS bloc has been in achieving its goals of, regional trade, economic integration, over the past 50 years?
Yeah, thank you very much for the opportunity. Firstly, I would like to say that before ECOWAS was created, and even before the independence of the individual countries in the 1950s and 1960s, groups in the region, the various kingdoms and states like Dahomey, Benin State, the Asante State, the Mali states, the Songhai Empire, and all those political entities had existed and had traded among themselves for so many years. In fact, salt and gold used to be taken from West Africa all the way across the Mediterranean to Southern Europe. And so the region has been a hub of economic activities for centuries. However, the creation of ECOWAS was actually part of the general African Union or Organization of African Unity goal of decentralizing integration so that the various regions like East Africa, Southern Africa, Northern Africa, Central Africa, and West Africa could have their own regional economic communities in order to facilitate continental integration at the local levels. And in that respect, I would say that ECOWAS has tried its best because, well, there's a natural tendency for the people to trade among themselves. That is one. And two, because of the creation of the organization, it has increased trade amongst African countries. In fact, the usual tariffs and the usual barriers are relatively better than between non-ECOWAS countries and other ECOWAS countries. So it means that if one wanted to move goods from Accra to Lagos, despite all the challenges on the way, it is relatively better than it would have been without ECOWAS. So we will talk only in relativity and not in absolute terms. And in that respect, I think ECOWAS has done the best it could.
All right, the best it could. I guess that's a good place to start there. But let's look at the macroeconomic overview of the bloc there. We see total GDP there about $508 billion. We see GDP per capita, population of around 441.3 million, about that. Then debt to GDP ratio about 61.13%. So let's look at unity at this time. What would you say are the implications of, member states withdrawing from ECOWAS on the bloc's economic integration agenda? Because we see what the data is showing there. Maybe we might see reductions, from that.
Yeah. So the figures are impressive. Fortunately for ECOWAS, the largest country in terms of population is a member state, that is Nigeria. Nigeria, for some time now, has been part of the top 3 economies on the continent. That is also a plus to ECOWAS. Then we have other economies like Ghana, Cote d'Ivoire, Senegal, following in that order, the next 3 biggest economies among the 15 member bloc group of countries. And if you look at that critically, you realize that Nigeria has a chunk of this percentage. And it has the largest economy with growing manufacturing capacity. Other countries like Ghana and Cote d'Ivoire are doing well, but Nigeria is far ahead. And I think that I've always maintained that if you have a bloc of that nature, you need the stronger economies to create the vortex, that's the economic space, for others to follow. Because sometimes we can all pretend that we are all equal, that Togo is equal to Nigeria. Yes, these are 2 sovereign states. So in terms of sovereignty, you can claim that equality. But in terms of the substance, in terms of the economy, in terms of who can call the shot and who can put or marshal resources, there's no way you can compare Togo with Nigeria. Despite the common history and all of them being African states, Nigeria is far ahead. Ghana, Cote d'Ivoire, and Senegal, these are the 3 main economies. And I think that if these 4 countries are able to take the lead, they can create the vortex for the others to follow, so that the whole region gets better per capita income, better human development index. And that is also very important. When we see the figures, you see per capita income, the highest being about $4,000, but we still have Niger. The poorest, Niger, Sierra Leone, are among the poorest in the region. What are we doing about it? The fact that you see a higher per capita income does not mean that people are really getting those incomes. It means GDP over population. And that is, an accepted way of measuring how well an economy is doing. But when it comes to the real terms, you need to implement socio-economic programs that really reach the people. The news before this particular interview, where Nigeria, the Lagos state government is, doling out money or, giving support to families that are into abject poverty. These are some of the things that we have to look at in order to lift the whole population alongside. Other than that, the growing youth unemployment and the increasing population would mean a disaster in the future. But currently, the pace is good, and if we keep it up and we double up by implementing good policies that create jobs for the people, I think that is the way to go.
All right, so looking at the bigger economies, the bloc, do you think they're doing enough, when it comes to their interactions with international, most of the, top economies in the world, like the US and the UK, do you think their trade structure is well set up to, bring the kind of development we want to see in the whole bloc? Are they doing enough? That's the bigger economies, so that we can see that trickle-down effect to the, smaller economies, and also the vulnerable within those, so-called big economies.
Okay. So amongst ourselves, we are trying our best, but between ECOWAS and the rest of the world, much needs to be done. In fact, in 2024, the best five, or among the best, yes, among the best five producing or largest producing countries in terms of gold production in Africa, 3 of them were in West Africa. And we're talking about Ghana, Mali, and Burkina Faso. These are amongst the top 5 on the continent, and 3 are in West Africa. Now, what does it mean? Are we able to come together to say that, well, we are major gold producers, so we should negotiate? But then there has been some good news around, where what we call resource nationalism, where countries are now resorting to value addition instead of taking the gold in raw form to external our trading partners. We have decided to set up gold smelters and refineries, that should be refineries, to add value to the gold before they are sent out. Some countries are also increasing the taxes that they get from these mining contracts, because before, some of the taxes are quite ridiculous. You realize 10% and other things. Now, many countries are increasing it. And the result has been mixed, because in Mali, for instance, it has been more adversarial with external investors. That has also drawn the condemnation of external trading partners. But in Ghana, that has been smooth. Ghana recently set up a gold board, and the gold board is supposed to be the authority to buy all the gold produced locally. That is in the informal sector. And in fact, since then, the country's currency has been strengthening, which is very positive for the country. And in the past weeks, Ghana's currency has been the strongest in the world against the dollar. And these are some of the reasons. So I believe that in terms of the trading partners between West Africa and the rest of the world, it has not been too bad. But then recently, when Mr. Trump took over in Washington and imposed the taxes, it sounded like the US, especially being the largest economy in the world, is in a more, should I say, adversarial, or more of a tariff-oriented. It's taking a tariff-oriented route towards trade. And that is not also going to be very good, because countries that are resource producers, like West African countries, Nigeria, Ghana, Cote d'Ivoire, and others, are also going to be more defensive and also trade with countries that they feel will have good tariff agreement with them than those who will just unilaterally impose those taxes, which, by the way, the US courts are saying are illegal.
Yeah, we see the U.S. courts weighing there on the tariff matter, and we see investors, kind of excited with the reactions we've seen in the market. But, you did mention currencies, in the bloc, and I'm wondering, in your opinion, which currencies in the bloc do you think have potential to, strengthen more against the U.S. dollar, going forward?
Yeah, so currently the Ghana cedi seems to be on a rise, and it's so astronomical. It's doing so phenomenal. But if you talk of potential, every country has the potential. As long as we are resource producers and we can try to husband the resources and do well to invest in our domestic economies, we are likely to help with the strengthening of our local currencies. But most importantly, ECOWAS has been too slow in achieving the common currency status. I've always said that when the EU, the Rome Treaty that gave it to the EU, was being signed, African Union had already been conceived. The Organization of African Unity had already been conceived. And people like Kwame Nkrumah were talking about a single currency, a single economy, a common market, and all that, even before the EU was established. But now the EU has a common currency, and because of the collective effort by the member state, the currency is doing well, even well than the dollar, as we have seen for a long time. But currently in West Africa, we've been, facing challenges with achieving that kind of a common currency. I think that with this question, it comes the importance of achieving the common currency that is the best route towards a common market. And when that is done, we can collectively strengthen our currency and trade, and the trade between and among countries is going to be at the optimal level.
You know, talking about the ECHO and that, single currency plan, who do you think is holding, among the countries is holding the ECHOs back from actually, getting that ECHO, on the road?
Yeah. So firstly, it has to do with the threshold, where before countries can be accepted to be qualified to join the ECHO, you should have some level of inflation that is not disturbing. Your GDP should be significant, and that everyone is almost qualified. But in terms of the macroeconomic and the fiscal policies, you shouldn't have so much deficit, because the countries don't want to start this kind of the usage of one currency with a burden. You don't come with a burden when you come to use it. So there's a threshold, and countries have been achieving it and be slugging and achieving and slugging, and so others have been sluggish in terms of trying to achieve this. However, what I think is that, as I've mentioned, the stronger economies can start, and the smaller ones may follow. That's what happened in the European Union. It wasn't an overnight thing. It started with Benelux, Belgium, Netherlands, and Luxembourg. And these are smaller economies. Even they started with the smaller ones, and the bigger ones joined. Currently, Germany, France, and Italy are the three biggest, and they lead the way. So people should not shy away from that. Nigeria is by far the largest economy. We should grant it that respect, for it to take the lead, followed by Ghana, Cote d'Ivoire, and Senegal. And when this is done, others will be more disciplined to follow. But where the bigger ones are not taking things so seriously is a problem. Then there's another issue where those using the CFA are more reluctant to join the rest of ECOWAS. That is also another issue. And then there's another argument where people are saying that the Anglophones should start a common currency of their own before the CFA and the Anglophone currency can be merged. So there are different schools of thought, and much of what we want to achieve to really have the common currency, in fact, has been slow, and there is no unanimity in this. And I think that it's about time we took it more seriously, because then it will help with integration and help grow the collective economies of the region.
All right, I guess at this point, we'll start planning for the next 50 years for the bloc. But thank you for helping us unpack this. This was Fidel Wosu, the CEO of DefSec Analytics Africa Limited, helping us unpack what to expect in the next coming years and how to strengthen the ECOWAS. Thank you so much.
You're most welcome, sir.
All right, we'll take a break now. When we come back, we'll head straight to the markets. That's in a moment. Just stay with us.
Modern life.
Welcome back. Well, let's head straight to the markets now with Willie Bong. And, definitely it's been a wet trading day right here. Yeah, but you seem dry.
Well, I seem dry, but I don't think it's dry at the NGX.
Right.
You can look at the screen there. It's obvious, they got all the, I think the wet paint, the red paint just poured all over.
Investors are slipping.
Yes, you got the word.
In the markets.
Slipping in the markets. The slip up in the market is that one. I think we'll mention what stock it is, but I think let me just kick off. I'm not happy to report this, and I'm going to, sanction that company. Yeah. But most major stock markets in Africa were in the green at intraday, except for Nigeria's NGX, obviously on the screen there. Nigeria's NGX ASI was down at intraday at about 0.2%, still at 111,000 points though, but this was due to a 10% decline in Seplat Energy lost that. We'll find out with our analysts. But JSE South Africa's index was up 0.86% at intraday. And let's look at Egypt's EGX trading up also 0.14% up on the screen there. And we know Nairobi Securities Exchange closed Wednesday's session in the green territory. That's two consecutive days of positive closes. But let's talk to Onose Asotie Naolo, senior investment analyst, Main Street Capital, to tell us what's driving the sell-off in Seplat. Good afternoon, Onose. It's good to have you on the program.
Afternoon, Will. Thanks for having me.
Yeah, Onose, we just mentioned that the Seplat Energy is the big elephant in the room at the NGX today. What's causing the sell-offs there?
Well, there isn't anything in particular. Well, nothing fundamental in particular. Earnings are strong, companies doing well. But what we do see is where we you need to look at where we are in the market right now. If you look at the Seplat order books, it's full sell, right? Everyone is selling. There are no bids in the market, and that's one thing that's happening with Seplat. Now, why are there no bids in the market? It just so happens that Seplat is a large cap stock, and what we see happening in Seplat is dragging down the market primarily because it's a large cap stock. Well, Seplat's price action is similar to what we're seeing in a lot of different stocks. And because of where we are in the market right now, we're at all-time highs. And at all-time highs, it's what I call the discovery mode. The market has gone into discovery mode, right? And when that happens, investors tend to reevaluate the stocks that they believe will do well. I know that's exactly what we are doing over here. So if we believe a stock has high growth potential, and the market goes into discovery mode, then there's a possibility that other people will think that that stock also has high growth potential, and we see price go up. If a stock doesn't have high growth potential, then investors may be more likely to sell that and get into stocks that have better growth potentials right now. So what we're seeing is Seplat doesn't really have as high of a growth potential as other stocks in the market. For example, some consumer goods stocks that have been on a run, or even some banking stocks. And because of that, the effect of that is what we see people selling that off, to possibly now get into other stocks, with the expectations that their price will do better in the short to mid term.
Okay, talking about stocks with high growth potential, I'm just going to mention a few now. Oando, is it one of the stocks that you see being a high growth stock? Because investors seem to be playing ping pong with that stock. Today, there's a bargain hunting on it, tomorrow sell-offs. What do you see for Oando in the next, say, short term? 1 to 3 months from now?
Oando still has a lot of potential to do well. So you need to remember that last year Oando went on a run, and that run increased its valuation, or how investors see the stock. Now you now have to get into a situation where maybe their Q2 results, investors kind of digest their Q2 or their half year results, especially with we know that they increased their barrel of oil capacity with acquiring some new oil fields. So then you now have to look at and gauge, okay, are those the new oil fields, does it directly translate to a higher output, right? Or if there's a higher output in the market, the decline in oil prices, is it really affecting their margins? So if they can really maintain their margins, or increase their margins, then you might have a situation where investors might want to come in. So, but right now, we're seeing price really pull back. It's around 48.7 naira. That's pulled back from almost 100 naira. So some investors might look at that and go, okay, it's close to a 50% pullback. It might be a good time to get in. RSI is really low, so you might see Oando maybe push up to maybe 77 naira. I wouldn't be surprised if in the mid short to mid term, Oando pulls up to around 77 naira. So there is a chance for Oando to do well.
We'll wait and see, especially with the bonus that was promised. I think investors are still waiting for that. But it's been 2 years since President Tinubu took office. Have the macroeconomics benefited the stock market so far? What should investors be looking out for?
So the macroeconomics have really benefited the financial side of the sectors. Right. So even if you look at GDP reports, you see that the financial sector has been doing really well. And unfortunately for a lot of companies in the real sector, it hasn't really been a great situation. But then you now have to look at what's going on right now. So what has been going on in the last 1 year is slightly different from what's going on right now. Because even when you look at how that has affected FMCG, stocks, FMCG stocks have been struggling with crippling debt, for the last 1 year. But now they're beginning to come out of it, and we're beginning to see that reflected in their stocks, But with the current economic landscape, it's a lot more stable. Especially with FX being a lot more stable. That's something that's really important, because even companies like MTN and FMCG companies, their main problem isn't just that, the naira loses value. It's that it loses value very sporadically. So if the naira can stay within a particular range, then they can plan around that, and it won't affect their margins as much. So right now, what we have, at least in the FX landscape, where we've had the FX kind of stay within a particular range, that has been good for a lot of companies. So if we can have stability, even if situations aren't really ideal, if you can have some level of stability, then I believe that a lot of these companies can plan around that, and then they can incorporate that even into their own projections, and so that it doesn't hurt their margins as much. And then when that happens, the stock market doesn't punish them for lower than expected margins. So as long as we have stability, I think stocks will perform well.
I think the all-time high is proof enough of that. We'll see how we can sustain that. But how the market end today is negative at intraday. Do you see a flip?
Yes, I think the market will end negative. Seplat is exerting a pretty significant effect on the market. And I know that other high cap stocks aren't really seeing a lot of buy pressure. Nestle is also down there, I believe. Nigerian Brewery isn't so hot either. So I believe we might see a negative close for the day, which isn't really a bad thing. I mean, we reached all-time highs recently. It makes sense that some people will take profits off the table.
I'm sure this is good news for you and other investors out there. Thank you so much, Nasi Asotie, and our senior investment analyst, Main Street Capital, for sharing your perspective as always.
Thanks for having me.
So let's look at the Middle East and see how sentiments are there for major stocks that we track. Well, negative, not so good news from there. It started out in the green after the news that President Trump, we saw the court, throwing out Trump tariffs, saying, no, shutting it down. But right now it's in the red. Who knows what's driving it? But we'll dig deep and keep track of the market and know what's really pushing the Middle East markets. But seeing Abu Dhabi index, we see it down 0.23% at intraday. Dubai 0.71% down. Looking at Saudi and Qatari indexes, at the Tadawul and Qatari index, we see them also in the red. 0.53% and 0.72% down. Massive losses for that region when all of the indexes are celebrating the court win, waiting for Donald Trump to appeal. Now, U.S. futures, let's look at how they performed in early trade. We see them rising after that trade court blocked Trump's reciprocal tariffs, and NVIDIA beat earnings report. In NVIDIA, we expected NVIDIA earnings at the close of the bell yesterday, and came out better than expected. So markets are celebrating that. S&P 500 futures, you see it's up 1.16%, gaining that. NASDAQ futures up 1.7%, and the Dow futures up 0.56%. So the court ruled Trump overstepped his authority and easing market fears over trade policy. Uncertainty in the market usually influences sentiment, but we see markets really rallying at that news. Now, NVIDIA shares surged over 5% after reporting strong earnings, and this was driven by the 73% growth in its data center business. Now, markets are now set to end the week and the month higher, and is boosted by AI momentum and cooling tariff worries. Now, let's look at Asia markets. How did they perform today? How they closed Thursday's trading after a U.S. trade court ruled President Trump had exceeded his authority with reciprocal tariffs. We saw them in the green. South Korea's Kospi up 1.89%, and we see the Nikkei in Japan jumping 1.88% as well. And this is really fine because South Bank of Korea had cut interest rates to 2.5%. That was its fourth cut in 6 meetings. And Japan's Nikkei, we mentioned, also jumped there. Now look at the Shanghai, the Hang Seng in China is also up 1.35%. And we look at mainland China, the Shanghai index also added 0.7%. And India's Nifty 50 was up 0.33%. So win for Asian markets. Investors are also eyeing the Asian chip stocks after NVIDIA posted strong earnings driven by a 73% surge in data center revenue. We'll be looking out for DeepSeek. Something's coming out. They released a new AI data, not announced, but we see it driving sentiments for tech spaces. We'll be keeping out an eye out for that and see how Asia markets and other tech stocks react to this news. Oladi, DeepSeek competing, rivaling OpenAI.
Right.
So right now,
in the open, I guess.
In the open. And they said when they launched it on Hugging Face, just silently, quietly put it out there. They didn't make it,
no
a special announcement. They just, okay, we got this, and they put it there. And now OpenAI is possibly scrambling right now to hold on to its market.
The great AI challenge competition, at this point.
Let's launch ours. We got that one we're working on.
Right.
Let's put it out there.
Not natural intelligence. But happy inauguration day. At this point. But fun fact.
Okay.
May 29, 2023, the stock market, that's Nigeria's stock market, 52,000. The all-share index, 52,000 points.
That was the time we hit that.
Yes. Fast forward to today. 111,000 level.
That's about 100%.
110% in 2 years.
Wow. That was I said. The all-share index is proof of his administration's policies on the stock market, because we see it evident.
I remember that time like it was yesterday.
It was just
everyone was like everybody on the
Tinubu rally.
Yes, everybody was pro-business, so the stock market was just rallying
on that sentiment.
From that sentiment. But yeah, we'll see what happens, going forward.
We'll see moving forward.
Fantastic.
Apart from the stock market, let's see all other aspects, all the
barometer
sectors,
of the economy.
Of the economy works.
Thank you so much, Will, for giving us the details there. But let's head on to Europe now. I know most of the markets in Europe are closed for Ascension Day, but we have Chip there. Great to have you. Chip, we're seeing there's some data out there for European firms, and we're seeing that some of the European firms are concerned about the Chinese economy. Talk to us about that, Chip.
Thanks for having me. Well, the ongoing trade dispute between the US and China is turning into a nightmare for European firms, and that is what the president of the EU Chamber of Commerce in China said. A big chunk of European firms doing business in the world's second biggest economy, so around 3/4 of them say it has become harder to do business there. And most of the European businesses say they have been affected by the Chinese economic slowdown in the last 2 years as well. Now, what is also interesting from the EU Chamber of Commerce's latest survey is that European companies are more concerned about China's slowing economy than they are about the US tariffs. The ongoing US-China trade dispute was the second biggest concern for businesses.
So what can be expected now?
Well, to give you a sense of the difference in terms of how European firms see doing business in China versus the tariffs, around 7 in 10 companies said they are concerned about China's economic slowdown, and just under half said that they were concerned about the trade tensions between the United States and China. Now, the Chinese economic slowdown has had a bigger impact on their business in their country than the trade tensions between Washington and Beijing. And on top of that, European businesses are also less optimistic about the future in China. They do not expect their earnings and revenues to improve, and the reasons for that are in China itself. European companies say they have missed out on business opportunities last year due to issues with market access and regulatory barriers. Another reason is that the business environment in China has become increasingly politicized.
All right, thank you so much, Chip, for giving us the details there, and enjoy the holidays right there in Europe. All right, 2 other matters now. Let's head on to Zambia. We'll see the Zambia's annual inflation rate that declined to 15.3% in May 2025, and marking its lowest level in nearly a year, driven by a continued drop in food prices. And that's according to the Zambia Statistics Agency. This represents a significant decrease from the 16.5% recorded in April and then March there. Food inflation, a major contributor to the country's overall price levels, decelerated for the 3rd consecutive month to 17.9% in May, down from 18.7% in April. Slowdown is attributed to a favorable rainfall pattern that has improved agricultural yields, particularly in the staples like cornmeal and vegetables. On a monthly basis, consumer prices rose by 0.3% in May, a decrease from 1% increase observed in April, indicating a moderation in price pressures. And Uganda has relaunched direct flights to the UK, and a move expected to increase fresh produce exports to Britain. The new Ugandan Airlines route from Entebbe Airport in Kampala to London Gatwick will run 4 days a week with total capacity for passengers as well as 25 tons of goods per flight. The new air route will be served by the Airbus A330-800neo, reinstating direct flights to the UK after British Airways scrapped its service to Entebbe back in 2015. Well, let's head straight to the commodities market now. We have Rosemary here with the details there, and it's about cement prices. They typically fall during the rainy season due to a slowdown in housing. However, in 2025, we've seen that trend reverse. Rosemary, talk to me about what we're seeing here with cement prices.
Good afternoon, Adi. So ideally, there is supposed to be a reduction in the price of cement, especially during the rainy season, because we are supposed to see a reduction in building because it's harder to build during the wet weather. But the reverse is the case this year, and this is due to a mix of demand and supply factors. So now on the demand side, demand is not really reducing because we're seeing an increase in infrastructural projects. For example, we have the Bodo Bunny Road in Rivers State, which is set to be completed by September 2025. And we also have the Lagos Ibadan Expressway, the 8.5 kilometers of the final first phase of this road being completed by the end of this month, and a host of other projects as well. So this indicates that there is still high demand for this commodity, which puts pressure on the price. Now, on the supply side, a lot of industries in Nigeria have to generate their own power for manufacturing purposes, and the cement industry is no exception. So now the cost of operating and maintaining this massive power infrastructure is really expensive, not to even consider the other costs like logistics costs, cost of importing certain raw materials, and maintenance of machines in this industry all affect the final cost of this commodity. So now, if demand keeps on rising and the cost of supply also rises or demand tightens, this will cause an uptick, or this will make the price of cement remain elevated, which will increase the cost of infrastructure projects in Nigeria and also make it less affordable for many Nigerians.
All right, so let's pivot to the construction sector. Now, I know that grew by about 4.19% in the third quarter of 2024. We also see real estate services that surged by 46.52%. So, definitely, I guess that's a sign that, cement demand, is rising. So, talk to us about how this, impacts the real estate industry, housing units. Well, we're seeing people struggle with, house rents and high prices for sales.
Certainly, the growth in the construction industry by over 4% and the growth in real estate services by over 46% definitely shows an increase in demand. So in economics, if demand grows faster than supply, that's the supply of cement, prices will remain elevated. So for the broader cement industry, this indicates higher profit margins, which is good news for producers. And it's even more beneficial if they are able to pass down these high prices to consumers without increasing their cost of production too much. But for developers and home builders, this increases the cost of construction, their cost of construction basically, and they tend to pass down this higher cost to tenants in form of higher house rents.
All right, so what are you seeing going forward, for cement prices? Do you think there's some kind of a silver lining, coming up that could, drive some of these prices lower?
Well, we've seen a reduction in gas prices, and gas is a key fuel or one of the most important cost elements in the production of cement. But in reality, in reality, a lot more goes into the final cost of this commodity than just a reduction in fuel prices. So we have transportation, logistics, labor costs, maintenance of these machines, and all. So all these factors play around to determine the final price of this of cement, basically. And given how high demand is in the market currently, producers might, even if there is a reduction in cost due to a reduction in fuel cost, manufacturers might want to keep their prices high so they can benefit from the high prices and like expand their profit margins and all. So going forward, I do not see cement prices coming down anytime soon because of the pressure of demand and high cost of supply due to inflationary and exchange rate pressures.
All right, do you see the players there, the big players in that cement industry, do you see them collaborating, to help drag those prices down? We know they've had agreements, recently.
Well, if you look at the theory of things, it is an oligopolistic market. So there might be instances of pollution or some of these players are strategically watching each other to see which moves they might make so that they can also respond in a more smarter way to increase their profit margin. So the competition is intense in that market. So, and every player is trying to increase their profit margin. So given the fact that competition is intense and everyone in that market is out to make profit, except for government policies to manage that situation, I don't see those players collaborating to bring down the price of this commodity anytime soon.
Right, I guess they're in it for the profit. All right, thank you so much. That was Rosemary Hira, analyst with Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Ladi.
All right, let's circle back now to what's playing out in Abidjan. We see there's a general consensus that Africa's resources are underutilized at the ongoing African Development Bank Group annual meeting. Following up on this, our correspondent Ini John McQuay had a chat with the Minister of Education, as the former Minister of Education, Dr. Obi Ezekwesili, and this is and she, preferred some possible solutions in this interview. Take a listen.
Data from AFDB suggests that 80% of Africa's development is funded by the continent, and just about 20% actually comes from outside the continent. But I mean, it's common knowledge that the perspective is that majority of Africa's development is funded from outside, and so the continent is always in need. Why do you think there's this skewed perception instead of the data that we have from AFDB?
Well, because 20% is still a substantial number for any country's development budget. However, I think that the key thing that we have to understand is that we also have created an impression of not caring about our internal resources that go toward development. And so you find a situation where the budget for education of a country is, let's say, $300 million. And then a development partner is coming to the table with some $30 million or $50 million. And the citizens of the country will pay so much emphasis and attention to the $30 million that's coming from development partners, and they would ignore the larger pool of resources that the country is spending based on its own domestic resources. We shouldn't do that. We should really care about what every dollar of investment that is going into a sector is generating. We do need to have a results and outcome-minded approach to the issue of financing and development. For as long as we don't have it, our interest would be in all other things other than putting a lot of attention to how we are investing our own domestic resources. I'm not one of those sort of saying, oh, adversity has come upon us, because the global architecture of development financing has markedly changed. I am one of those sort of saying, this is the era of discipline. we haven't really been disciplined as a continent in the way that we have looked on the necessity for urgency in our development journey. We kind of have aided this idea that bilateral partners and multilateral institutions have a responsibility to develop Africa. Development is about discipline. When Africans sort of look at the Chinese and they envy what has happened in China, there's a discipline that went with the development journey. China depended on the bank, on the World Bank, for a part of its development journey. In fact, it wasn't until recently that they started scaling down in terms of the relationship with the World Bank. But the development journey of China was led by the Chinese through conversations and ideas. Oh my God. Okay. It's ultimately all about discipline. Development requires discipline because the quality of decisions that are made determine outcomes. You can continually make wrong decisions and somehow hope that development will happen. It doesn't happen like that. One of the things that we've seen over the decades now, as we've watched countries that were poor move from poverty to growth, leading to development over time, is that the things that cumulatively add up toward those outcomes can be replicated. That's the story of China. China came to a place where it realized that, wait a minute, we are busy distributing poverty amongst ourselves because we're not consciously following principles that incentivize people to put their best foot forward. So what did they do? They basically deployed the principles of the market for their economy. The moment they understood that pretending that through collectivism we're going to get to development.
All right, that was John McRae there with a one-on-one sit down with the former minister there, Obieze Ekwesili, right there at the AFDB AGM happening right there in Abidjan. I guess tomorrow we'll get the finale of what's playing out there. But let's get a check on what's happening with other markets. Now we're seeing Bitcoin there still, hovering, ranging between the $108,000 to $109,000. Looking at the heat map there, we see some parts mostly red and pockets of green. Just a few pockets. Doge is in the green. Could it be because Elon Musk is leaving Doge? That's Department of Government Efficiency. Who knows at this point? Ethereum, 1.91% up, still continuing to outperform slightly. That's Bitcoin. Let's look at some of the headlines in the space now. We'll see Mental Planners have raised $21 million for a fresh issuance of zero-interest bonds to Evo Fund to fund its next wave of Bitcoin purchases. According to a May 29 announcement from the Japanese investment firm, the 17th series of ordinary bonds were issued in $525,000 denominations, and that's supposed to mature sometime in 2026. And we see the Russian banks have started rolling out crypto investment products tied to the price of Bitcoin following a green light from the central bank. We see the Bank of Russia has permitted financial institutions to offer certain cryptocurrency-based financial instruments to accredited investors. Russian banks are now free to provide qualified investors with a range of crypto products, including crypto derivatives, securities, and other digital financial assets tied to the crypto prices. We're also seeing KuCoin, a leading global cryptocurrency exchange. They've launched a new copy trading function alongside the exclusive Supernova program. These initiatives are designed to simplify crypto trading and empower users by fostering a dynamic, community-driven ecosystem where traders of all levels can connect and succeed. The copy trading feature allows KuCoin users to automatically follow and replicate the trades of top-performing traders in real time. Hopefully, some traders make profit from that. But looking at the crypto market generally, we're seeing Bitcoin not replicating what we're seeing in the markets in Asia and the futures in the U.S., Bitcoin is still, hovering around that 108, 109,000 level, even though we got that big news yesterday from the U.S. courts there, telling President Trump that, you cannot unilaterally slam those tariffs on most of these countries. And the White House is saying they're going to appeal that. But definitely that was a breather for most markets. But we're seeing Bitcoin not really jumping on that news. Maybe the investors are waiting for other bigger news. But that's how most of the markets are looking. And right here in Lagos, Nigeria, we see the stock market too not looking so bad. They're still hovering around those highs, even though it's a wet day right here in Lagos, Nigeria. But thank you so much for watching. We'll be back again tomorrow to bring you up to date on what's playing out with most of those markets. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.